What on earth's happening at Palo Alto Networks? The former market darling turned market punching bag. Here's a cybersecurity company that's widely regarded as having some of the best technology in the business. Palo Alto pioneered the next generation firewall. They're at the forefront of keeping digital information space at a time when corporations big and small are taking data security very seriously. Oh, and this company's got some of the fastest growth around. Yet the stock just keeps getting clubbed. It's down 24% year to date, including a brutal 12% decline just last Friday after the company reported. After that kind of move, you got to ask yourself, what was so terrifying about the results here? I mean, the company delivered in-line earnings with higher than expected revenue, up 48%, billings growth up 60%. And this is pretty much the cheapest it's been since the company was IPO in 2012, because the growth is so darn rapid. Now, look, I understand this kind of stock's now out of style in the Wall Street fashion show. However, if you believe the cybersecurity industry has still a lot of growth ahead, as I do, maybe it's worth considering the idea that the recent weakness here could be a pullback that's viable. Palo Alto reported a strong quarter. Management may be just being conservative with guidance. Could be a coiled spring. Let's take a closer look with Mark McLaughlin. He's the chairman and CEO of Palo Alto Networks. Learn more about the quarter and his company's prospects. Mark, welcome back to Mad Money.
Thanks for having me back, Jim.
All right, Mark. On May 18th, the head of the SEC made a statement. Mary Jo White said cybersecurity is the biggest risk facing the financial system. Is she overstating the case, or is it still, even after all the work that you guys have done, the biggest issue?
I think it's a huge issue, and it's going to remain that way for a long time to come. I saw this morning the Fed said they investigated over 50 breaches in the last 4 years. The Director of National Intelligence not too long ago said cybersecurity was the #1 issue for the United States, full stop. So I think that's going to be an issue with us for a very long time.
Now, in this quarter, though, you did say at one point in the conference call that there's some macro volatility and that you talked about how the stock market, the Chinese stock market's going up and down, the oil prices. I mean, are we now at a point where some of these companies are saying, listen, you know what, things aren't so great, we're going to cut back on cybersecurity?
I think what's happening is that security is a priority spend item, and I think it's going to remain that way at the top of the IT stack for spending. I think what's going on is there's some volatility in the market about budgets for IT in general with currency fluctuations, oil, or interest rates going up or down. There's a lot of anxiety out there, and what we saw is just folks taking longer for sign-offs for larger deals.
And what's with Asia? Why are they so confident that they're not going to get hit?
Well, I think, we were seeing a number of things that's going to affect what you see in the world. In Europe and in Asia, there's new legislation in both places that are going to require companies to report breaches when that has occurred. That's currently not the case in a lot of countries in Asia and in Europe as well. New legislation has been passed in most of the major countries there that are going to require reporting of breaches. So I think you're going to see a strong increase in breaches that have been occurring anyway, but have not been reported.
I mean, they just covered them up?
No, they're just not required to talk about them publicly, so they don't do that. But soon they're going to have to do that.
All right. Now, I wanted to try to get a sense on whether you felt that the street was a little bit harsh on you. I mean, we caught a downgrade, which is it was kind of a difficult one. It's from Deutsche Bank, and the guy's a serious player. It's a downgrade to hold on slowdown, and talked about a growth deceleration to 33% from 46, 47% in previous quarters. Should we be worried about that kind of deceleration?
Well, I think in that case, is looking at the product revenue. We have to remember that we're selling a platform to our customers, and the platform, it really resonates. It's got a prevention capability everywhere the attack has to do something right. Portions of it are product related, portions of it are subscription services related, and we did 33% product growth in the quarter, which is a very strong number and off a big number as well. On top of that, though, we did 61% billings growth year over year, and that really shows how fast and widely adopted the platform itself has become with the subscription services. Well,
let me just go again, because I think it's important after the stock went down so much. Here's a quote from this piece of research, the downgrade. Clearly, the 2014-2015 bubble, in quotes, in security spend is over, and demand is normalizing such that it's no longer enough of a tailwind to offset macro and other pressures. Too negative?
Time will tell on that. Like I said, I think from all the customers we talk to, security remains a priority item, probably the #1 thing on the list that they're going to spend. As far as what happened in the last couple years' time, I think a lot of companies were out buying technology security-wise just because they were very anxious about things. That's never really been our go-to-market motion. We do best with customers who are taking a thoughtful architectural approach to security. They want to take care of themselves for 3, 5, 7 years down the line, and that's really our sweet spot in the enterprise space and where we've been doing so well.
Now, I know in the conference call you talked about some big wins away from others. That made me feel like, well, wait a second, maybe everybody has everything, and all you're really doing is taking market share. But then when I looked at your pack, you see top 25 customer buying behavior, and you drop off to customer number 20, and already they're spending way too little.
Well, it's interesting to say that. So if you look at the addressable market opportunity, Jim, we're in a $20 billion market. We have single-digit market share in that market. And the market itself has been growing, call it 6 to 9% or something along those lines for a very long time as far as the CAGR over the last 4 or 5 years. In that time frame, we've been growing 50+% or close to 50% throughout the entire time. So I think what that shows is not only do we win lots of greenfield opportunities, but we, by definition, must be taking massive amounts of market share from the incumbents. And that's a motion we're very comfortable with, and that's why we talk about the displacements on the call.
I was kind of surprised. To me, financial services is the most important other than government, federal, military. From the looks of your documents, there's some financial services companies, some banks, they must be trying to get away with spending as little as possible. Is that really maybe the case?
Well, I think, across the board, if you look at our business, we don't have any verticals that represent more than 12 to 13% of our business. So we're very horizontal nature, and I like that from a business perspective because we're spread out that way. It also shows that the technology is useful in all verticals. I think from a spending perspective, what folks are doing is they're moving from a paradigm of saying I have these point legacy technologies that are primarily reactive to next-generation platforms that allow you to be proactive in nature, and that's what we have and why we're doing so well in that market, regardless of the vertical.
Do you think that one of the hopes of people when I read Twitter, that everyone loves cybersecurity stocks, but they don't like them when they don't have any, there's no episodes. And as soon as there are no episodes, what people say is, well, there's going to be consolidation. Palo Alto's going to go buy FireEye. Palo Alto's going to buy CyberArk. Do you need to buy anybody?
When we think about the value proposition of the platform, and we're always trying to sell the platform, our criteria is pretty simple, which is, are things, if you put them in the platform, are they way better than they were outside of the platform? And if we can't answer yes to that question very strongly and our customers agree with that, then we don't try to do that. So we're not trying to roll up the security industry or anything along those lines. What we're trying to do is for a big, important swath of the industry, like I said, a $20 billion portion of the market, is to deliver a platform that has very proactive security capabilities that's got the best chance for customers to defeat attacks.
Well, good. I'm glad you clarified all of that. And I did feel that I personally felt the research was too negative, but people want, they want an incident so that therefore you can blow up the story. I think it's great to just have the platform that everybody really wants. Mark McLaughlin, Chairman, President, CEO of Palo Alto Networks. Good to see you, sir.
Thanks, Jim.
Guys, coiled spring if you get an incident. Okay, in the interim, this is the cheapest it's been since it came public. I don't know, that's appealing to me. Things can change. And money's back to the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.